We are a UK company operating in Mali, and we have a standard to maintain, and all our work is to a high standard, and we understand the mining, we understand the geology, we understand the processing, ship it out. We're not inventing any wheels. You can't stop change, you can't stop progress, and you're not going to turn back now.
Hello and welcome to Crux Investor. Here today with Bernard Aylward, who is the CEO of Kodal. Now, you're a lithium play in West Africa.
That's correct, that's us.
Right. Well, welcome to London.
Thank you.
You look like you've been in sunnier climes.
I have, Australia and Mali, much sunnier, much warmer.
Very nice. Well, look, today we are going to learn a bit about your business, Kodal. But can you kick off with a 1-minute summary for people so they can understand a little bit about you and the story, and then we'll pick it up from there.
Sure. Well, we're very clear. Kodal Minerals is a West African focused exploration and development company. We have our flagship project, which is the lithium project at Bougouni in southern Mali. We've been very focused on fast tracking that through to development over the last 3 years. And as well, we've maintained a suite of gold assets with active joint ventures, but we're very focused on our lithium.
Okay. Now you're a small outfit. Okay, very low market cap. Your exploration, lithium and gold. So let's kick off with lithium, because lithium has had a tricky 2-3 years. Why lithium?
Well, clearly it's a mineral of the future, and I think we're seeing a lot of development, a lot of focus on clean energy, development of electric vehicles, development of storage of solar and wind generated power for mega grid scale down to home scale. And lithium is a key part of that. And to be honest, I think we're seeing fundamental change in the market. And I often say you can't stop change, you can't stop progress, and you're not going to turn back now to be a petrol and fossil fuel dominant transport industry. And that's why we took the view back in 2016 that it was a long-term play, and I think that's still the case.
But isn't this case of African lithium storage? I'm not too aware of too many of those in West Africa. I assume it's a hard rock. Right, okay. Which we'll come back to. Is this a case of just jumping on the lithium bandwagon, hoping you can get money to be funded, or is there a bit more to it than that?
Well, look, of course, when it's an opportune time to get into that industry, yes, we did. But it's not quite jumping on the bandwagon, because with lithium in Mali in particular, we were actually coming on the back of a government-funded study, World Bank-funded study of the lithium potential in Mali. Right. And that clearly demonstrated that there was good quality projects to be had. Okay. We acquired it quite cheaply, we acquired it quite early, and we've focused a lot of attention on it. And in saying that as well, that actually bought into our company a lot of serious long-term investors, and our major shareholder is intimately involved in the carbonate industry, lithium carbonate industry, and they've been a big backer and supporter of us since the acquisition.
When was that?
2016.
But 2016, great time for lithium.
Fantastic.
You made a lot of money. I made a lot of money. Even I made a lot of money in lithium. But what are they thinking now?
Well, again, like I say, they're long-term. They take a long-term view that the lithium market will continue to grow. There was clearly a lot of speculation that supply would outstrip demand over the last couple of years, but it's clearly become apparent that that's not the case, that demand was exceeding previous forecasts, and supply has not increased significantly to meet that. And yes, we're in a trough at the moment, and I think you'd say, well, anyone who didn't tell you today that it was a difficult market wouldn't be telling you the truth.
But isn't it true that the inventory levels are still quite high? I mean, the price hasn't recovered because of that. And some of the larger players, low-cost producers, I'm talking with the South American guys, Chilean, Argentinian guys, are, holding back.
I think you're referring to the brines.
Yeah.
And I don't think they're actually holding back. They have limited capacity to expand. They have a product that's not necessarily immediately useful for the battery industry. It's useful for other parts of the lithium industry. But then again, referring to some of the expansion you're seeing possibly in Australia, hasn't come forward. And I'm not sure that the inventories really are exceeding what the usage is at the moment.
At the moment or in the future?
Well, probably a combination of both. And I think right now you would say that in China a lot of the producers are less active than they have been. But, I think there's some external forces.
Well, there is this month, possibly the beginning of this
Chinese
year.
New Year, and a lot of factors weigh into that.
Do you want to be the first one today to mention the coronavirus?
No, but
okay,
you've already done it.
Right?
But, clearly it's out there.
Well, I think there's a kind of hopefully short-term issues. But so generally, if you mention the word lithium to investors in Australia, an Australian company, you don't get much shrift, do you? I mean, people are like, no thanks.
No, I think that's right. If you were trying to start off a lithium play with no resource and no support and just telling people, here, I've got this great idea, you're going to not get support today. Right. If you said to them, I've got an idea to how I'm going to manufacture a gold mine,
not another one.
Everyone will be all over you. Everyone will be all over you. And that's the market.
Right.
So in our case, we know we have a real project. We know we have real support. We know the people we're dealing with are end users and long-term supporters of the lithium industry. So, as in all mining, we take the good and the bad, and at the moment it's bad, but we know it will get better.
Okay, so let's assume on the basis that the macro story for the batteries and EV thematic is correct. It's coming. It's a question of, and I will get onto this later, how you fit into that cycle or the next cycle, for instance. But talking of assets, you talked about Mali.
Yep.
And you talked about and the good and the bad. Let's talk about some of the things which are going on in Mali, which a lot of people are talking about at the moment with some of this terrorist activity. Okay, I want you to tell me what the case is. So, Mali, Côte d'Ivoire, Burkina Faso does have some issues.
Yep.
Is it affecting you?
No, there are issues in West Africa.
Right.
And I've personally been working in West Africa for over 12 years now. I travel there regularly. In fact, I was there last week. Where we operate is quiet. It's primary industry dominated.
Where are you?
We're in the south of Mali,
right,
heading down towards the Côte d'Ivoire border. We're 180...
Southwest?
Yep.
Right.
Well, south-southeast actually.
Right,
180 kilometres south of Bamako, the capital. Connected by bitumen, main road, good infrastructure. Local people are farming. Local people are involved in primary industry. We have excellent relations with the local community, the government, and the local government as well as main federal government. It's not to say there aren't issues in Mali. We know there are, and we know they are off to the northeast of Mali, where it's been associated in the past with partly jihadists coming out of Libya, coming out of Algeria, where they've been forced out. And the Sahara is a big place, and but there is active involvement from the French military forces, from Mali military forces, from UN forces that have kept this under control, particularly in Mali. And look, I probably would disagree to say there was militant or terrorist strong in Côte d'Ivoire, but there are issues around some banditry and other things in Côte d'Ivoire that, again, don't really affect our business. And our business has been performing over the last few years very well. We've been very active and secure.
See, that's an interesting definition that you just made, because you mentioned the word terrorist. People get terrified. But if you talk about criminal enterprise, it's not such a concern. Well, that sentiment, the net effect is the same, but in terms of people's sentiment, in terms of investment, is different. But okay, as far as you're concerned, business as usual.
Yep.
You know how to operate in country, and you, as a white man, can travel around the country and feel.
Well, where I go, yes, absolutely. We travel. I walk around Bamako, restaurants, talk to people, no problem. We go to site just as ourselves. We walk around the town, we know the people, we've had zero trouble.
Okay, great news. I wish more people would come on this program and tell us that instead of hiding, which is the normal response we get when we...
Well, we tell people we're very happy to host them, come and see, and I'm willing to go, willing to take people I personally would say you would have no problem.
Okay, so I'm just trying to sort of park the things which are sort of not non-core here. So
sure.
Tell me what you're doing with the gold.
So gold assets we've maintained, and we've always focused on our tenure, because that's number one critical issue for exploration companies, ensuring you've got good title.
Yeah.
And over the last couple of years, we've managed to refresh and renew the title to our gold exploration licenses. We've maintained a low level of work to keep them alive. They're good assets. Obviously now there's significantly more focus on gold, and we've been fielding some interest from companies and other people about our gold assets. Just to be clear, we have an active joint venture with Resolute in Cote d'Ivoire.
Yeah, good company.
They're drilling, they're exploring.
Yeah.
We think they're doing a good job. At the moment, they haven't met their earning, so we still have plenty of upside there. And in Mali, as I said, we're fielding some interest, and we're looking to crystallise some value for those assets.
So tell me, what do you know about them?
So
why are they attractive? Why should they be attractive?
Well, we've explored them in the past. We've drilled. We've had good wide intersections of gold mineralisation. We've got surface gold anomalies. We've got targets that are drill ready. And just to be really clear, like, we focused on our lithium because it clearly had the best chance to move quickly to development. It didn't say that we thought our gold assets were bad. We think they're good. We've demonstrated in the past that we've spent money on them, and we will continue to do so. But if there's an opportunity for the company to get better value, that's what we'll do.
So you're hanging on to them because you see some kind of monetization event.
I think they're real assets.
They're real assets.
Yeah.
Okay, so otherwise you'd get rid of them because it's just an overhead, right?
Well, you wouldn't spend money on them, and there's no point in us just holding ground for the sake of it.
Okay.
As I said, these have had drilling, positive surface anomalies, really good.
That whole greenstone belt tends to be sort of 1-2 grams, that sort of homogeneous type coverage. I mean, what have you got? What do you know about what you've got?
So in a lot of instances, yes, 1 to 2 grams. We've had drilling results over 7 to 13 grams per tonne in our Nangoloso project. In our
Is that an outlier? That's unusual, right?
No, not really. I think you'll see that in West Africa now there's a lot of underground mines, there's a lot of higher grade underground and open pit operations. It's typical of exploration, where you'll always look for something big to start with, and as you drill more, the big ones tend to come back to that maybe 2 to 3 grams. But say if you look in Mali, for example, the B2 gold for Kola deposit, that's over 4 to 5 grams. Marilla was high, Sayama was high.
I'm looking at Rock's gold.
Fantastic.
10.
Fantastic, and that's Burkina Faso, that's
but Mali too. Okay.
Yeah, Mali too.
I didn't know.
It's the Burundian sequence. Right. So the whole of West African gold belt is hosted in what's referred to as the Burundian sequence of rocks. Yeah. So you will have different belts, and for example, in Burkina Faso, the Houndé belt tends to have more high-grade gold than some of the others. But
okay, well that's gold. I just want to, I want to take all the variables which are not necessarily core to what you're trying to do, but have some value and deal with some issues that are out there in the public. So thanks very much for that. Let's get on to lithium. Okay, that's why we're here, right?
That's why we're here.
So you have been partly funded by the World Bank through the Malian government. Is that the way it flowed? How did that money come in?
No, our interest was peaked in the area through the World Bank sponsored study.
Got it.
We then met with some of the local groups and acquired the projects, and our funding has early on been, we had support from a group called Rishin, who are backed by a Chinese lithium carbonate producer, who came in very early when we were in exploration, just had finished our first drilling campaign. They came in and they put in approximately £3.8 million over, peak premium to the market.
Yeah.
And since then have been supportive and they've followed money in other placements. They've supported with technical support, and we've undertaken metallurgical test work with them, as well as taking some of our sample from rock to concentrate to a lithium carbonate product that demonstrates we can manufacture
a
premium product.
How much money have you raised to date?
We're probably around 6.5 to a bit over £7 million.
But I was reading you've got a PFS.
We've got a PFS.
For £6.5 million.
Where we've been very lucky is that, as I said, we've acquired this project on some other people's work. Free to admit that.
Right.
They're outcropping pegmatite veins. Most of our money has been spent on drilling and then on engineering. And so we, again, we readily acknowledge we're a small team, but we're a very competent team. We've got local Malayan geologists, we've got local land manager, we have a project manager, Steve Zaninovich, who's an engineer with over 30 years experience in West Africa and previously been involved in building mines. So we've recognised where we can save money and where it's important to spend money, and that's what we've been doing.
I mean, that really isn't a lot of money to be able to get.
It's not a huge amount.
So how much data did you inherit, or were you able to acquire?
There was no drilling before we drilled.
So what could you possibly know with £6.5 million?
Well,
was it pounds sterling, was it?
Pounds.
Right, okay.
Yeah. Well, if you look at it, they're outcropping veins. Right. So we drill the vein, we follow it where it goes undercover. We have a lot of assays. You probably caught me on the hop there with the actual amount we've spent. I think we've probably, we've been maybe north of 7, but it's not a huge amount.
It's there or thereabouts, right? It's not 20.
We're low. Yeah.
Okay, I'm just trying to understand the scale of what you've done with that money, and you're saying me most of that's gone in the ground.
Absolutely.
So it's a low-cost management team, not taking big salaries.
Absolutely. Yeah.
Or shares or any of that.
I'd like to take more money, but I haven't been.
Right.
I get value out of our shares.
Right.
I'm a significant shareholder.
Okay.
Our other board.
What's that mean?
I'm about 1% to 1 to 2% of shares. Not worth much today, but hopefully worth a lot more in the future.
Right.
And we've been actively exploring. So my history is I'm an exploration geologist, and my goal is discoveries.
Right.
And I like to get out and spend money in the ground.
Okay, but let's come back to this money you have spent in the ground and what you do know today, because a feasibility study suggests that you're ready to have conversation.
We spent about £800,000 on that, maybe a bit less, because we did a lot of metallurgy. We've done a lot of engineering design. We've done a lot of open pit optimization studies. We've reviewed the transport costs, and that's a large item for us.
Who's created this feasibility? You haven't done it yourselves.
We have.
You have done it yourselves.
So Steve Zaninovich, our project manager, has managed that, and we've utilised key consultants in the industry.
Right.
And we can mention the names of DRA for the plant design. We've used Knight Piesold for the water study, for the tailings study facility. We use Digby Wells for our environmental and social impact assessment, which is fully approved.
Right.
So I guess it's that experience in that region has allowed us to use the consultants, to know what we want from them, and to manage our controls.
But do you get is there any credibility to that? Because people want some big brand name, stamp of authority there, and go, don't worry, those guys put their name to it. It's a proper feasibility.
Those consultants have put their name to it. Absolutely.
But
we manage it.
You've pieced together, but you've managed it. Okay, so you think the important bits have got the sign off of independent. Okay. And therefore you are, which was going to be my question, which was, have you or are you in discussion with funders to do what you need to next? Because you've got to get a DFS, whatever you want to call it, done next to really get the funding in place. But you've got to give people a sense of what the economics are, and you've got to have a sense of what that's going to cost you.
Yeah, we do.
Do you? Okay.
I think the main point that I would make there is that we now are pending our mining license being granted. In the first half of this year will be a fully permitted development project. As I sort of outlined, our major shareholder is keen to see us in development, and while there's no firm discussion around funding and support of that funding, they've always been saying that they want to help us fund it. Now, we believe that we can improve our estimate of the capital cost, which is currently 117 million US dollars. So it's not a big capital cost.
Okay.
We think we can improve that. We think we can make it more attractive for investors to support this development.
Mm-hmm.
We've done our work to a standard that's feasibility level. Our drilling has been very consistent and well focused, so we don't think we need to do a lot more infill drilling around any of the resources.
Mm-hmm.
The next stages, and we've got this covered and happening at the moment, is continued improvement on our plant design and on our optimization. So we're not suggesting that at this stage we're planning a lot more work to say create a bankable feasibility, because we think we will be in discussion with our major shareholder about moving forward. We have an offtake agreement with them,
right?
So they're very keen to start receiving product,
right? And
how we structure that.
So like I say, they put about 3.8 in at the beginning.
They've put
in more than that now.
About 5.2.
5.2 now, but they're a large.
Yeah, mate, 25% shareholder. They're an interesting group. They're quite.
Well, how big are they?
They're one of the larger producers in China. They're about 50,000 tonne of lithium carbonate, plus they do lithium hydroxide a year. They fully integrated, so they own the sulfuric acid plant that feeds the carbonate plant. They're looking to buy product from us so that they've got a control over their supply chain.
But I think where I'm getting to is, how I want to understand that relationship, because it's really, really important. You're telling me it's important, but I want to know that's really important, because for them that's just, it's option money for them. They're a big company and they've probably placed a bunch of bets. So what I want is a sense of, how regularly do they engage with you? Are they happy if this doesn't do anything in this cycle, just going to sit and park that because they're sitting on 25%, right?
They're sitting on 25%. They have a board member appointed. I'm in regular correspondence with them.
But how are they driving you? How are they driving? And I know all the everything that needs to be in place, but how do they?
I'm not sure. I would say that they drive because they know we know what we're doing. They know that at this stage of the project development, they're not drillers or explorers or involved in getting a mining license granted.
Yeah.
They drive us by the carrots out there for us to be in production and selling to them.
Right. Okay. So you're saying we're continuing to move forward. We're moving at a reasonable pace.
Yep.
For a reasonable price as well, and they're not discouraging us from continuing to move. So every time we've asked for them to step up, they have.
Yep.
And that's just a case of what can you tell the market? So let's talk about the market very quickly. Share price hasn't done so well this year.
No. Bad.
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 Why?
Yeah. We're all unhappy. Well, I think, when you started off this chat today talking about lithium market and sentiment in the lithium market, I think that's reflected in our price. I think we are seeing a lot of speculative money moving to other parts of the industry.
Yeah.
And then further, we've had a couple of issues in regards to some things. Even though I do believe we've been moving very quickly, some things I would have liked to have been quicker.
Yeah, like we met each other about a year ago with one of the other fund managers in town here. I heard the story then. You're circa 20 million market cap. You're circa 5-6 now, right?
I don't think we were ever 20, unfortunately. I would have liked to have been, but we're a bit over 5 now. Oh, you mean our share price?
Yeah.
Yeah, our price was.
Yeah.
Our market cap was.
Market cap,
right?
You're about 20.
Yep.
Now you're at 5.
Yeah.
Okay, give or take.
Yep. And that's not great.
It's not great, but I accept it's the lithium market, and I accept things that were happening in the market, especially recently, that you can't control. But so maybe let's focus on things that you have been able to control, like getting the PFS done. How long did that take? Because I'm stunned here.
Well, we appointed Steve in October 2018.
Right.
We'd already done a reasonable amount of metallurgy. We really got into it straight away. So the feasibility, the main focus initially was get the ESIA complete and then move on to the feasibility. So we probably would have been 9 months.
Right.
Pretty solid.
Right.
And that's that's a good time.
Again, so I just need you, because people are going to be like, well, why the hell so quick? Why so cheap? Comparison to all the other stories we're hearing. So is it because it's such a small scale?
Look, it's not really a small scale. It's going to be a 2 million tonne per annum plant. It's going to be 3 open pit operations. It's going to be haulage, treatment, and transport out to the coast. There's a lot of factors to consider. It's quick because when Steve joined us, he'd just been at a mine in Australia, just been developing a lithium mine in Australia. So he had a lot of knowledge coming in. Very experienced in West Africa. As I said, our work had been focused. So, we were doing things other people weren't, in that we had undertaken metallurgy almost from the start. We'd undertaken the environmental work almost from the start. We had completed drilling to a good standard. Our resources have been independently estimated. So it's all those things, and we've always done a lot of things in parallel.
Okay.
So it's never been with us, here's the form guide and here you do step 1, step 2, step 3. We might have been doing step 1 and 5 and 2 and 3 all at the same time.
So you had to be
nimble.
Like a little bit nimble, a little bit entrepreneurial because of the lack of cash.
Well, we're small.
And you're small,
we're small,
right?
tight money. We don't like to spend.
How much cash have you got today?
We're under 5. We're about 250, bit under 250.
250,000?
Yep.
Okay.
It's tight.
It's really tight. So you're going to have to go and raise some money soon.
Well, not soon. Not today. No, but yeah.
Soon,
yeah.
Right. That's the reality, because you've got costs in country.
We've got costs. We've got, activity that we want to keep doing.
Right. Okay. So thanks for being honest about that. So but here's the rub. You've got the feasibility study. That was interesting to learn about how you did that. You're going to have to do a DFS to be able to say to your funders, okay, I think we're ready to go, whether it be your Chinese group or otherwise.
I think the push on a DFS...
Can you get funded on an FS?
Depending on what our partner, who is familiar with everything we've done,
well, that's
what
25% of it, right? Not necessarily going to step up at asset level or give you the whole amount, right?
Some of our chat has been the whole amount.
Something you want to tell me?
No, because it's just clear that, there's talk. Right. There's talk that goes nowhere, and there's talk. And at this stage, we may be in the nowhere phase, but there's talk of fully developing the project. Because they have experience themselves. They've built a 2 million tonne per annum concentrator plant in China. They know what's required.
Right.
They have access to some funds that they have been interested in supporting us. And whether that means that in the future we have a closer working relationship around the plant, we're not sure yet.
Right.
But, there's some different discussions going on.
So what are those discussions? Are we handing the keys over and go, there you go, guys?
No.
Right, okay.
No, we've never contemplated that. They've always invested in us as a company, not as a project. And, I think we're always looking for the best outcome for our shareholders, of which they are one.
Right.
But they are a shareholder.
Okay, so let's say this is all what if, okay? But I want to understand your thinking here. So what if is, so that Chinese product comes in and pays for everything above the ground, you're still going to need to pay for stuff under the ground, presumably, and you're still going to need to go to market and raise money to do that.
Yep.
But that's going to be a bit easier if you've got the plant component.
Yeah. I mean, look,
approved, right?
Of course there's always the traditional routes you can go down of trying to take your project to a bankable level, go to the bank, secure funding.
I'm hearing you're unconventional. I'm hearing that. So what are the options you're looking at?
Not fully unconventional, but we are looking at all the alternatives, and one of them is that our major shareholder has in the past spoken to us about supporting the development.
When? 2016?
No.
Or 2019?
2019, recently. Right. And that's sort of, as I say, we've got a good relationship with them.
Yeah.
From time to time strained, of course, because we'd all like a higher share price. Strained because...
Do they care about share price? They don't care about your share price, do they?
Oh, of course. We all do. We all want to be successful, and part of that is saying that the share price reflects that. Whether that is perhaps saying that we're not getting through to our shareholders to say, actually, things have been really good and really successful and really positive. Maybe we need to work on that. But on the... in terms of the project, it's It's solid.
They just want an offtake though.
They do.
Right.
Yeah.
But you're saying they
but,
also care about
they want to
share
make
price.
money. We all want to make money. They want to make money. They want to be seen to be successful. They want a project that delivers in a steady state.
But how's that money come in? Have they taken equity? Yep. Or is it just for on off-takers or MOU around an off-taker basis? Is it all 100% equity?
Equity.
Okay.
Yep. And we have an offtake agreement with them. You see our current planning has us producing around 220,000 tonne per annum of the 6% lithium concentrate. The way we look at our feasibility at the moment, as I said, it's around 117 million capital. It's got a payback period of 1.7 years. It's got an IRR of 57%. It's robust, and I don't try and say that lightly to anyone. We think we've got a very developable project, and our major shareholder does as well, and other people do as well.
The numbers sound robust.
Yeah,
they're robust until they get delivered, and you deliver
that's
those
right.
numbers, right?
That's right.
So that's why I'm saying, that's why I wanted to get some substance behind the FS happening so quickly and so cheaply, etc. You stand behind those.
We're actually quite conservative in the numbers we use, and I'll give you an example of this metallurgical recovery. So we have test work that demonstrates we'd get over 74% recovery. When we did our optimizations, we ran with a lower 65 to 68% recoveries, and with this cash flow modelling, we used about 71%. So we're lower than we anticipate we can achieve. But it's just to make sure that if we go ahead with development, that it's real. And there's no point us trying to fool ourselves. We're realistic about what the project can be. And another example would be, as I mentioned, that the cost of transport is high because we're in Mali, it's landlocked, we've got to ship it to the port. We have spent a lot of time getting good estimates and good quotes on the transport. We've received quotes down around $82 to $84 a tonne shipping, and we've been using over 95 to 98 in our optimizations to give us that confidence that yes, we can do it and take into account any unforeseen factors. So we've been very focused on our work, but a lot of effort has gone into making sure we're comfortable with the numbers. We spent a lot of time with our consultants.
So you're comfortable with these numbers?
Yep. But
again, no sense of the economics. Can you make money? Can you make enough money to make this a viable proposition? I mean, the payback, 1.5 years. Payback on what?
Yeah.
What?
On the full spend.
117.
Yeah.
Full 117.
Yeah.
Okay.
When these things operate, they should be seen as a bulk commodity. We're going to be producing 220,000 tonnes per annum and shipping it out.
Right.
So bulk commodities, when they work and when they're focused on correctly, generate a lot of money.
Yeah.
They're a good business to be in.
So when do you actually know whether you can actually get it to port and export it, presumably back to China, I'm guessing?
Yep. Look, I'd love it if there was someone in Europe who wanted to buy the concentrate because we're closer.
Well, that's the next point. It was all this kind of responsible, ethical mining. You're in West Africa and you ship it around Cape Horn over to China. It seems a very long way to go when there's a market right next door to you. But I guess your Chinese partner's not going to be too happy if you're selling it to Europe, are they? If I think you get that far, right?
I think they want the product for their own business.
Right.
But if we can demonstrate that there's more money for everyone to be made in a Europe factory, we would definitely be looking at that. But at this stage, there isn't that sort of opportunity here for us.
But do you understand whereabouts they capture money in that supply chain?
Yeah.
Because for them, the further, as you said, fully integrated, they're capturing money the whole way up that supply chain, right?
Yep.
But for you,
we're in the
shipping
middle.
ore, right?
Yeah, we're shipping ore,
okay.
And that's what we feel our strength is that we understand the mining, we understand the geology, we understand the processing. Ship it out. We're not inventing any wheels.
Right.
We've got a well understood process that we'll be using.
Okay, but you see my point there about trying to understand the dynamic between one group of miners and we're selling ore.
Yep.
Let's get the best price possible.
Yep.
And another party is saying, well, let's get the ore because we're going to
make more money out of it
and make it all the time. So that's a conversation to happen. Let's come back to the feasibility component. Now you say you want to say more about the economics. Brilliant. What about these licenses and permits? Because again, you mentioned to me you're fully permitted to this point.
Yep.
What else are you going to need to get through? Because again, my experience of West Africa is that they just want you to be mining. It's not traditionally difficult.
No.
Tell me about Mali.
It's a pro-mining jurisdiction, and they're very sensitive to the fact that in Mali they're gold only at the moment. They'd love for us to be up and running a lithium operation. We're receiving support for that, but we are following all the protocols correctly. And as I said, I was just down there last week. We had our first technical meeting with the technical group for the Department of Mines. That went very well, as expected, because during our 3 years, we've hosted them on site several times. As I say, we've maintained very good relations and contact with the government. The next stage is we then meet with the next group of ministries, which will be including the Finance Ministry, Transport and local infrastructure groups, to formalise this application. That will also include the Ministry of Mines. We expect that there will have been a letter of support from the technical group of the Department of the Mines to say it is a valid project. And then we move on with the process of getting it formally approved.
Okay.
And then once that's done, we move on to our formalising the offtake and timing with the major shareholder and financing.
What's the timing?
What's
the reality of that? You mean,
it's in place.
It's in place,
it's
right?
In place.
But the reality of that is you've got to build a.
We've got to have a schedule to say we expect to be able to deliver in whatever date in 2020, 2021. That's what we want to be. 2020 is optimistic. I know.
But
I'm always optimistic.
Don't be. That's mining.
Don't be foolhardy.
So, but what would a realistic timeline be in production? Because you've got to build a plant.
We think it's about 20 months to be in full production.
Really?
Yep. It's quick. Again, but
right.
we know there's a lot of things that are already able to be sorted out in advance. As I was showing you earlier, we've got quite a lot of our plant design complete. There's still things to do on that to improve it, but we've got a lot of that complete. We've got a lot of our open pit planning complete. We've got approval for everything we want to do in terms of building the plant and the infrastructure in terms of haul roads and power and so on. So there's not a lot of those blocks that will get in our way.
Well, apart from money.
Apart from money.
Right.
Which is a huge block.
It's a huge block, and it's the big block going on. Because it sounds like you come up with an accelerated program.
Yep.
And you think that that would be enough to give comfort to your Chinese partners, which is fine. They may have slightly lower standards than, say, if you wanted to get conventional funding as part of this. You're going to need to. It'd be unusual, not unheard of, but unusual to be funded off an FS, right?
Yep. I think the thing to look at is to say. We haven't gone for a lower standard because
I'm not suggesting lower.
No, but we recognise we are a UK company operating in Mali, and we have a standard to maintain, and all our work is to a high standard and to the full extent of our professional standards. This is it is good work, and to say we will have to assess the funding opportunities when we get to the next stage of formalising that.
But my point is not that. Whether you think it's good or not is not
whether other people do.
It's people looking in from the outside going, have they got a BFS? No. Okay, move on to the next project. Yeah. Okay, you've got a job. I'm not saying it's impossible because I have seen it. I've seen people get funded off a PEA. Okay, so it's all possible. But you've got a job to do there.
Well, as I say, the reason while we've managed the feasibility ourselves, a lot of our key work has been through industry recognised expert consultants. As I said, our resource has been externally estimated. Our plant design has been externally designed by DRA, who've done multiple plants in Australia and in Africa. So we've got expert groups working with us. And I think, it's one thing for you, we're saying that we've done it quickly and at a relatively good price, but it's with our people who we've employed to do that for us. So that's part of, that's part of the price. And instead of saying to one of the consultants, you manage our feasibility, we wanted to be making sure it was done the way we wanted it done.
Okay. Bernard.
Thanks very much.
Let's leave it at that. Yep. Thanks very much for that introduction to the story. Like I say, it's been a year.
Yeah.
Oh my goodness, right?
Another year.
Another year.
Flies by.
Yeah. So look, I think you've got a bunch of things to do, but you know what you've got to do.
Yep.
And then what you've also got to do is come back and keep telling the market if you're delivering.
Sure.
And when the next thing is, and when the next thing is. So just finish off, 2020, what are people looking out for?
Well, clearly the first thing is us demonstrating the approval of the mining license application. We then will be formalising and finalising that offtake agreement, trying to deliver a schedule, financing, looking to build. As I said, we've got opportunities with our gold assets and continuing to improve the asset base that we have.
Okay, brilliant.
Thanks very much.
Let us know how you get on.
Sure.